Good morning and welcome to Bazaar Morning Call. I am Anuj and with me Sonia and Nigel, and of course in a market which is looking so strong that you wonder whether people need anyone to tell them anything. It's just been so strong, just one way. If you look at what's happened globally, there's a very strong momentum, and of course India has been having a momentum of its own. Not that the global cues are making too much of a difference, but it doesn't hurt if the global cues are positive, of course. For me, the key highlight was the fact that despite what the Fed Chair Powell had to say about containing inflation, I think the statement that stood out was that it won't cause deep recession. Why is that important? Is because remember, in the 1980s, the US had to hit double-digit interest rates, and that really led to collapse of the economy. Maybe this time things will be different, and that's what the market seems to believe, and that's why there's a rally. In fact, the interest rate hikes, 75 basis point rate hikes, no longer scare the market, which is clearly telling you that this is maybe a bit of a fresh bull run. India, of course, has been the best performing market, and it looks like that outperformance will be extended today, and we might have another gap up of 100 points or so.
Absolutely. Morning, Anuj. Morning, Nigel. And the equity cult is back, right? I mean, you can see it everywhere around you as well. You go out, you meet your friends, you meet your relatives, you meet even domestic staff, and all they're asking you is, what stock to buy, what trade to do. So at that point in time, of course, I mean, one can even talk about perhaps euphoric moods and maybe some, overheating of the market. I don't know about that, but I do know for a fact that anyone and everyone is now interested in entering equity markets, and you can see it with the number of demat accounts that have opened up as well. It was a strong week for the US markets too. So far, the US markets, the Dow is up about 1.4%, S&P 500 up 2%, Nasdaq as well. And overnight too, we had some good cues from across the US markets. The Fed chairman, though, is very strongly committed to, bringing down inflation. And in that context, a lot of expectations have now risen to 75 basis points as far as the rate hike is concerned on the 20th and 21st of September from the Fed. So just keep that in mind as well. Large buying once again from FIs, 2,900 crores is what has come through. All the DIs have sold a tad bit. So, Anuj, that brings us to this question, right? This decoupling that we've been talking about, the outperformance that India has seen, is that a trend that can last through the course of the FOMC meeting till the end of the month?
Well, it's lasted for 9 months, so it could very well do. Sonia, I'll repeat the point I made yesterday as well. The risk in this market is booking too soon. Because, remember, day before, when the SGX Nifty was down about 200 points, and I was making this point that that day was perhaps the best day from the risk-reward point of view to take longs. The day's low that day was 17,485, and today we could be testing 18,000 in 3 days flat. So once you get a good entry, after that, the only thing that you got to do is trail your stops. And how do you do that? I think you make previous day's low as your stop. Now, this is where things get tricky. I mean, if you're a day trader, then what do you do? Because at some point, the ones who got in earlier would want to book some profit. So, but this is a forgiving market. I mean, even if you buy at highs, 2 or 3 days later, the market will bail you out, even if you have to go through some bit of mark-to-market. The other internal is the FII stats in the derivatives market. Yesterday, the shorts were cut by 9,100 contracts, but we are still at 76% net short on index futures, which means that, again, perhaps there's a lot more short covering, which is still to happen, unless, of course, things change drastically. Now, this rising 20-day exponential moving average has really been the sacrosanct number. It's really provided a very good sort of stop for positional bulls. It's now moved up to 17,520. I know it's a bit deep, but again, it's for those who got in early, not for those who are chasing the market. In terms of upside, 17,950 to 18,050. If you see the chart of the Nifty, 18,050 was the previous closing top, and 17,950 was the top just, I think, last month or thereabout. That now remains the last resistance zone. And if you take that out and close about 18,050, then you make a move towards all-time highs. Actually, if you look at the market, it's practically there. The Nifty, the Bank Nifty, and the mid-cap index all are within 4% of a new high. And this despite a large pocket of the market, which is Nifty IT, still being close to 30% off its 52-week highs. It also tells you the strength in the domestic market, because if one large sector is still 30% off highs and the market is so close to 52-week highs, which means that a lot of broader market sectors, autos, FMCG, consumption, they have done well and they are at lifetime highs. But tactically, because even the Nasdaq is showing some signs of reversal, my sense is today even IT stocks may play a bit of a catch-up. that doesn't change things that, the IT itself is in some kind of bear market, but that may play some catch up. But on the Nifty, I think, as I said, you just got to now keep trailing your stops. And this is a market in which once you have an expansion, you stay in, because the meat of the trade is, when the market is expanding, and you'll never be able to time it in terms of the top or the bottom. So just stay in. Let the market throw you out. That's always the best strategy. Respect the tape, respect the ticker. That's something that we've learned always, of course. Nigel, hi, good morning.